Yes, sir. Good evening to all of you. So today we are going to start a very important rules, CGST rules for input tax credit. That is rule number 42 and 43. Okay. So in our yesterday session, we had discussed about the input tax credit, that is section 16, and we had also discussed about the blocked credit, that is section 17, subsection 5. There are multiple types of input tax credit on which input is not allowed as per section 17 subsection 5. Okay, we had also discussed on the credit in the special circumstances, that is section 18 of CGST Act. Also we had discussed the section number 17 subsection 1, 2, 3, 4, that is in which we had discussed that the proportion of input tax credit, bifurcation of input tax credit related to taxable as well as exempted or non-business purpose as well as for business purpose. Also we had discussed on section 17 subsection 4 the special option in case of banking company or in case of financial institution. Two option they have. First option, they can opt for the normal scheme, and the second option, they can go with the special scheme in which they can claim the 50% of their total eligible input tax credit. That what we had already discussed in our previous session. Now, sir, rule number 42 and 43. I am just going to explain these rules through certain examples so that it will be more convenient for us to discuss. So, sir, rule number 42. This rule will be applicable in case of input and input service. Okay. This rule will be applicable in case of input and input service. This rule will not be applicable in case of capital goods. Rule number 42 is specific related to the input and input service. Sir, now rule number 42, just take an example. Total input tax credit which is available in your GSTR 2B. Just take an example. Total input tax credit in your GSTR 2B is 10,000 rupees. That means you are eligible to take the input tax credit. That means there are showing eligible input tax credit in your GSTR 2B is 10,000 rupees. Now, from that input tax credit, just suppose 1,000 rupees input is related to your non-business purpose. Okay, that means on that input tax credit you are not eligible to take the input tax credit because those inward supply you had used for your personal consumption, not for your business purpose. So you need to deduct the same. Then after 1,000 is exclusively related to your exempted supply. Okay, if there is any input tax credit which is exclusively related to exempted supply, in that case you are also not eligible to take input tax credit on that behalf. And 1,000 input tax credit is related to your section 17 subsection 5, that is your blocked credit. Okay, so 7,000 rupees is your eligible input tax credit which is credited to your electronic credit ledger, because section 17 subsection 5 you are not able to claim the input tax credit. Though input tax credit which is related to your exempted supply or non-business purpose, you are not going to claim that input tax credit, so that input is not going to credited in your ECL. So these input are not credited to ECL. Okay, but the ECL input which is going to credited in ECL is 7,000 rupees. Okay, from that 7,000 rupees, just suppose 4,000 is exclusively related to your business purpose. Exclusively related to your business purpose. In that case, the balance input, that is 3,000, is called your common credit. That means that credit will be used for your exempted supply as well as taxable supply, or for your business purpose as well as for non-business purpose. This is the 3,000 rupees input tax credit. Now, sir, bifurcation is required. What is the part which is related to your taxable part, and what is the part which is related to your exempted part? What is the part which is related to your business purpose, and what is the part which is related to your non-business purpose? How you can calculate, how you can bifurcate. So, for that bifurcation, if you want to calculate the exempted input tax credit, exempted part ka input tax credit, in that case, you just need to use this formula. Your common credit, okay, that is 3,000 rupees multiplied by your exempted turnover divided by your full turnover, that is total turnover. Let's take an example. Your exempted turnover is around 1000 and your total turnover is around 3000. Just take an example. So the amount which will come, that to be your exempted supplies say related input tax credit, so you need to less that figure. Suppose 500 will come, okay, or now you need to calculate your non-business purpose. So in that case the concept is same. Your common credit multiplied by 5%, that is 5% of your common credit will be your non-business purpose. In that case, suppose that figure comes to 500 rupees. In that case, 3000 is your common credit, in minus 5000 related to your exempted and 5000 related to 500 related to your non-business purpose, then comes 2000 rupees will be your eligible plus earlier 4000, that is the 6000 rupees input is your eligible part, and the input which is related to your non-business purpose and the input which is related to your exempted supply, you need to reverse that input tax credit through form DRC03. Sir, concept okay? Kya please comment in the chat box that rule number 42 is okay, so that we can take the rule number 43. Just I am going to take one more example for your concept. Just take an example. Total input tax credit which is available in your GSTR to be returned. Total input tax credit which is available in your GSTR to be returned is 100 rupees. ITC related to other than business purposes is your 10, and exempt supply exclusively as 10, and ITC related to your blocked credit is 10. In that case, ITC exclusively related to taxable supply including zero rated supply, that means your business purpose, just take that input is your 40. In that case, the ITC credited to your electronic credit ledger will be 70. That means that this input is not credited to your electronic credit ledger. 100 minus this, you got 70 will be credited to your electronic credit ledger. Now common credit, from that 70, 40 is related to your completely for taxable purpose, then 30 will be your common credit, from which you need to calculate the exempt part. So 30 multiplied by exempt turnover divided by total turnover, or non-business purpose 30 multiplied by 5% will be your non-business purpose. In dono amount ko less from 30, then the figure comes as a eligible credit. Is that okay, sir? Is that okay, sir? Once confirm in the chat box that rule number 42 is okay. Then I am moving to rule number 43. Sir, I am waiting for your replies. Rule number 43 is exclusively related for capital goods. Okay. There are 13 participants and I got reply from 2 participants only. So, capital goods. Sir, rule 43 is applicable only in case of capital goods. Sir, what the rule says? So, rule number 43 says the capital goods which is exclusively used for non-business purposes. Sir, समझो ना, in case of capital goods, okay, if any product, any capital goods, that is any plant and machinery is completely used for non-business purpose, in that case at the time of buying of that plant and machinery I have not taken that input tax credit. Okay, so in that case there is no issue, feel free. But and if at the time of buying of that plant and machinery, that plant and machinery is used for completely for taxable purpose, in that case you had claimed 100% credit, also not an issue, because if you bought that plant and machinery and you are using that for non-taxable purpose, non-business purpose, exempted supply, in that case you had not taken input tax credit, so no question. But if you had bought it for taxable purpose, in that case you can take the 100% credit, not an issue. But question arises, sir, in case of capital goods, if you are using that plant and machinery or whatever will be your capital goods for exempted as well as taxable purpose, as exempted as well as taxable purpose, in that case what you need to do, so government prescribed one formula that the life of capital goods assumed as 60 months, assumed as 60 month or whatever will be your just take an example, you had bought an capital goods on which input tax credit is 60,000. In that case, first, in the month in which you bought that plant and machinery, claim 60,000 complete input tax credit in your GSTR 3B return. Okay, claim 100% input, and on a monthly basis 60,000 divided by 60 because the life is 60. Monthly basis 1,000 inputs rupees input has to be reversed through form DRC 03 by showing in GSTR 3B other reversal tab. Okay, sir. If any plant and machinery I bought which is going to be used in taxable as well as exempted supply, in that case I need to take 100% input tax credit, and monthly basis I need to divide by 60, and the figure comes, I need to reverse that figure on a monthly basis. Is that okay? Harikishan ji, I am not getting your point. Can you please clarify the same, or you may post your query on the WhatsApp so that I can resolve your query WhatsApp, because I am not getting your point. Now, sir, three situation we had discussed. Fourth situation, when I bought that plant and machinery at that time, that I am using that plant and machinery in completely for taxable purpose. And now I am going to transfer that plant and machinery for exempted as well as taxable person, as well as for taxable purpose. Then what will be the situation? Or second, when I bought that plant and machinery, in that case, I was used that plant and machinery for 100% exempted supply. Now I want to transfer that plant and machinery for exempted as well as for taxable purpose. So at that time, I have not taken any input tax credit. At that time, I have taken 100% input tax credit. Okay. So let's discuss on this issue with the point of example. Okay. We are not going to discuss on law. Just we are going to discuss it in completely in a practical approach, practical way, so that you will easily handle the practical life situations. Okay. Just you had bought that plant and machinery for, and the input tax credit is 60,000. Okay. Or at that time of buying you are going to use that plant and machinery 100% for taxable. Okay, so just take an example, 1st April 2022 को आपने उसको buy किया, you bought that plant and machinery. Okay, and for that purpose you are going to transfer in 30th 9 2022. That means at that time you had taken input tax credit of 60,000 rupees, 100% input tax credit. Okay, now you are going to use that plant and machinery for taxable as well as exempted purposes. Now read the language of law. If any capital goods which was covered under clause A, that means exclusively for non business purpose, पहले हम लोग second वाली situation ले रहे हैं, exclusively for non business purpose, and if it will be covered under C, that means for both, for taxable as well as exempted, in that case from the date of purchase of capital goods till the current date of capital goods, ITC related to clause A shall be calculated by 5% of each quarter. Okay, and then getting figure shall be added to output tax liability. Sir, nahi samajh aaya? Take example. That means your plant and machinery was you bought that plant and machinery and used as exempted supply in the course of exempted supply. Okay, so at that time the input tax credit was 60,000, but due to you are going to use that plant and machinery for exempted purpose, you had not taken any input tax credit. Okay, now you bought that plant and machinery on 1/4/2022 and you are going to transfer on 30/9/2022, 30th 9/2022. Okay, the duration is 6 months, that is 2 quarters, so you need to reduce 5% each quarter. So at that time 60,000 less 10%, that is 5% each quarter, 10%, you need to reduce 6,000 rupees, balance figure come 54,000 rupees. Okay, 54,000 rupees. तो इस 6,000 rupees को you should add to your output tax liability in the GST or 3B of September month. Okay, sir. 6,000 rupees you should add to output tax liability and 60,000 you should add to your input tax credit. Is that okay, sir? On first, I am just explaining again the situation. I bought on first for 2022 on a plant and machinery on which input tax credit is 60,000 rupees. Okay, at that time I was using that plant and machinery for exempted purposes only, and now on 30th 9 2022 I am going to use that plant and machinery for taxable as well as for exempted purpose. In that case, at that time I have not taken input tax credit. Time period is 6 months, so 5% each quarter, so 10%. Okay, so on that 10 6,000 rupees, that is 60,000 multiplied by 10%, I am not eligible to take input tax credit, because in that period I was used that plant and machinery for exempted purpose only. So that 6,000 need to be added to output tax liability for paying the tax. Okay, or now as I am going to use that plant and machinery for exempted as well as taxable purpose. So once claim 60,000, that is 100% input tax credit in GST or 3B return, or then after you should divide that 54,000 rupees, that is 60,000 minus, divided by the life of that plant and machinery, और जो भी फिगर आएगा उसको मंथली बेसिस पे रिवर्स करना है. इज दैट ओके सर? Sir, rule number 43, in case of exempted purpose to an taxable as well as exempted purpose में मैंने transfer किया, is that okay? Then I am going to take the second scenario, in which if any capital goods which was covered under clause B, that means which was as a in use for taxable supply, that means at the time of buying I had taken 100% input tax credit, and now if it will be covered under clause C, that is taxable as well as exempted, then in that case from the date of purchase of the capital goods till the current date of capital goods, ITC related to clause B shall be calculated by 5% of each quarter. That is, if I have use that plant and machinery for taxable purpose only for 6 months, then 5% each quarter, that is 10% for 2 quarter. And getting the figure shall be reduced from input tax credit, because you had taken 100% input tax credit, now you are going to transfer that into exempted as well as for taxable purpose. Hence the 10%, that is 6,000 rupees, you need to reduce that input tax credit, and balance figure shall be added to A, that is your common input tax credit, or on that balance, that is 54,000 rupees, you should divide with the life of that product of monthly basis पे आप उसका रिवर्सल करते हुए चले जाना. Sir, everything is okay regarding capital goods, or again explanation is required? All the theories mentioned here, I am just taking the practical situation which is applicable in our day-to-day life, and we need to apply the same in our practical cases. Okay, sir. Now we are going to start a very important topic under GST. Okay, sir. So we are not going to discuss on place of supply in our today's session. I am just going to start one more another topic. Okay. So I am going to start the topic which is very much relevant from our day-to-day life in our practical situation. That is, the topic is my mm, okay, we'll explain the last case again. I am going to start the discussion on audit and assessment. Okay, sir. Before moving ahead, capital goods. Okay, I had bought that goods, and at the time of buying I was using that product for taxable purposes only. That means I had taken 100% input tax credit, that is 60,000 rupees. Now, after 6 months, I am just taking the example of 6 months because this is a easy part for me for calculating the figures. Okay, so after 6 months, the plant and machinery got transferred for taxable as well as for exempted purpose. Okay, for business as well as for non-business purpose. In that case, for 6 months, I had taken that I had taken the benefit of the plant and machinery only for the taxable supply. Okay, and now I am going to transfer that for taxable as well as exempted supply. So first I need to calculate 5% each quarter. So 6,000 rupees will be for my 2 quarter. Okay, so 6,000 rupees ki input I need to reverse, because at the time of buying I had already claimed the 60,000 rupees input tax credit. Okay, and now I am going to use that plant and machinery for exempted as well as taxable person purpose. So I need to reduce that 6,000 rupees. Then the balance figure come as 54,000 rupees. Then 54,000 rupees is my common credit. Okay, or in this case, because I, at the time of buying, the same is completely used for taxable purpose. I had completely claimed the input tax credit, that is 60,000 rupees. So I just need to do 54,000 rupees divided by the life. Assume the life is 60 months. Okay, and 6 months has already left, so the life is 54 months. So I need to 54 divided by 54, so 1,000 rupees again I need to reverse every month. That is what is the concept of capital goods, which we had discussed earlier, and now I repeat the concept. Sir Rupesh ji, is that okay? Rupesh ji, please confirm, is that okay? Okay, sir. Now I am going to start a very important topic: audit and assessment. Sir, can you please describe the difference between audit and assessment? What is the difference between audit and assessment? Can you please explain, or can you please think on that? What is the difference between audit and assessment? Anyone can please explain the difference between audit and assessment? Yes, sir. Audit and assessment. This is a practical point from litigation point of view also. So, when I am saying that assessment, so assessment can be done by self. Okay. In GST, if I am talking from GST point of view, when I am going to file my GSTR 3B return, at the time of filing my GSTR 3B return, I am doing the self assessment because I am declaring my outward supply, and also I am claiming my input tax credit on the basis of my GSTR to be return. That is, I am declaring my tax liability and I am claiming the input tax credit on the self assessment basis. That means assessment can be done by self. Okay, but audit can only be done by others. When as a chartered accountant, when I am going to do the income tax audit my client, in that case the accounts was prepared by my taxpayer, but the audit can be done by another person. So always audit can be done by another person. So this is a very basic concept. आप कहेंगे sir, what is the requirement of learning of these theories? Because on the basis of your theoretical knowledge, on the basis of this theory, your concept got clear, and after the clearance of your concept at the time of departmental audit, at the time of scrutiny, at the time of litigation, the topic which I am going to discuss with you are really very much relevant for that purpose. So this is the first difference. Also, assessment is a first step, because You are going to assess your liability on the self basis. That means you are going to assess your liability. This is your first step, but audit is in a second step. After your assessment, audit can be done by other person. Is that okay, sir? So that is what is the difference between audit and assessment. Now, sir, what is the type of assessment? कुछ भी आपको रटना नहीं है. आई एम गोइंग टू गिव यू द ट्रिक्स फॉर दिस थ्योरी, बिकॉज दिस थ्योरी इज रियली वेरी मच इंपॉर्टेंट इन अवर डे टू डे प्रैक्टिकल लाइफ. सो फर्स्ट, when I am going to file my GSTR 3B return, I am doing the assessment, okay, on my self basis. That's called self assessment. Just take one more example. While filing your GSTR 3B return, okay, I had done any supply to any recipient. In that case, if I am not able to decide the value or rate of that supply, suppose I have supplied a particular product to Mr. X and I am not in situation to decide the value or rate of that supply. In that case, I have one option. I can apply to the departmental authority, to the proper officer, case, sir, please, I am not able to decide the value or rate. Can you please provisionally decide the value of rate on the basis of available documents? And after your provisional assessment, I will provide you the other documents, further documents, or the on the basis of those documents, you can decide the final assessment. Okay. So when you are going to the departmental authority for determining the tax liability, determining the value and rate of tax on a provisional basis, that assessment called as provisional assessment. Is that okay? Now, you had taken registration under GST. Okay, you had taken registration under GST, but due to certain situations, you are not going to file the return. But due to certain situations, you are not going to file the return. In that case, department has the authority to make the assessment on the basis of documents which is available in the hand of departmental authority. Okay, that means in this case you are not going to file the return, and that assessment is called as non-return filers assessment. Is that okay? Now, if you are in a business, okay, if you are in a business and your turnover is below the specified limit, but in reality your turnover is in excess of the specified limit under GST for taking the registration, and on the basis of documents which is in hand of departmental authority says that Mr. X, Mr. Sachin is liable for GST, but he has not taken the registration. So do the assessment of Mr. Sachin on the basis of documents available in our hand. So that assessment called as assessment of unregistered person. Or these are the category specific assessment. When you are going to self assess, that assessment called as self assessment. Another assessment is provisional assessment, non-written filers assessment, or assessment of unregistered person. Okay, now if departmental authority is in view that there is a evasion of tax, or we have to assess the liability of Mr. X, because if we had not done that assessment, in that case there is a loss of revenue to the departmental authority, there is a loss of revenue to the government. So in that case, if department is going to assess in certain situations, okay, then that assessment is called as assessment in certain special situation. Okay, sir. So these five type of assessment are there: self-assessment, provisional assessment, non-written filers assessment, assessment of unregistered person, or assessment in certain special circumstances. Now, question arises, sir, what do you mean by type of audit? So there are two type of audit. One is audit by departmental authority. When departmental authority is take your case under audit, and they will give you a notice in form GST ADT 01. Okay, GST ADT 01. there is a requirement that you should learn the name of the form, because when you will receive the notice, you should know for what purposes department has given me the notice. For that purpose, we need to know the basics of the notice of under GST, okay, or under any other act. So first audit is audit by departmental authority that can be conducted by the proper officer of department. Now, second one is special audit. Who is eligible to do the special audit? Special person, that is chartered accountant or post management accountant, is eligible to do the special audit. That is what is the types of audit which is available under GST departmental or special audit. Sir, don't think that, sir, what is the requirement of learning this theory? This is not a theory. I will give you complete practical aspect of assessment and audit. Okay, just wait. I am just clearing the basic concepts of your regarding assessment and audit. Now, one very practical issue I am going to take, which is scrutiny of return. Sir, what do you mean by scrutiny of return? If you are in practice, or if you are a business owner, or if you are doing job in any service industry, in that case, you need to be very much careful for that. That means, sir, multiple time or in current situation, departmental authority are going to issue certain notices in form GST ASMT 10. Okay, and that GST A7010 is related to your scrutiny of return. If department thinks, if the proper officer thinks that there is a discrepancy in your return filing procedure, or you had paid the less tax, or you had claimed the excess input tax credit, or you had not paid the required tax, in that case, departmental authority will issue a notice in form GST A7010. Okay, so in case of GST A7010, in what situation you got the GST A7010? If there is any difference between your GSTR 2B versus your 3B, if there is any difference between your GSTR 1 and 3B, if there is any difference in between your income tax audit and your GSTR 9, or if you had filed the late return but you had not paid the late fees or interest, or you had not paid the proper reverse charge mechanism, that is RCM. In these cases, department will issue form GST A7010 for scrutiny of return. Okay, sir. Sir, if someone has got GST A7010, well, then what to do? First step in your business, if you got that notice, in that case, first step, you should read that notice properly and carefully. Okay, you need to identify the factors on which the grounds on which the department has issued to the notice. Okay, then after, you should check that the particular notice is correct or not, because in multiple time in current situation department is issuing ASMT 10 in cases of March 2020 return. Okay, March 2020 के return से related department is going to issue GST ASMT 10, and they raise the grounds that you had not paid the required interest. So you first need to go to the March 2020 return and check notifications for that. When you will check that notification, you will found that government has extended the return filing date for that period due to COVID. So in that case, there is a no interest liability or no late fee should be charged, and department is not taking their fix and issuing the notice. So this is your responsibility to provide in the proper reply with considering the facts of COVID, okay, with facts of the notification issued by the departmental authority. The same provision is applied in multiple cases where department is going to issue the notice. You should check that the notice is substantial or not, the facts are correct or not, or if there is any notification exemption is available or not. This is your responsibility. For financial year 17, 18, 18, 19, 19, 20, department is issuing notices, there is mismatch between GSTR 2A and your input as per GSTR 3B. In that case, also you can difference between your GSTR 2A versus GSTR 3B versus 2A. In that case, also you can argue that, sir, at that time, as per section 16 subsection 2, there was no condition available that the input has to be reflected in GSTR 2A or 2B return. So on that basis you can argue. Also there are multiple high courts decisions are available in this regard. Okay, so this is the way the department is going to issue the notices. You should prepare your replies. So department has issued the notice in form GST ASMT 010. Within 30 days you need to file the reply in form GST ASMT 11. The form in which you need to file the reply is your GST ASMT 11. Department will issue the notice in GST ASMT 10. You should file the reply in form GST ASMT 11. Okay, sir. Within 30 days. If you had not filed the reply within the required time, in that case, department will issue the proceeding under section 73 or 74. Sir, please make a note that section 73 or 74 we are going to discuss in later case. Most probably in our tomorrow session we are going to discuss the section 73 or 74 of CGST Act. बड़े खतरनाक provisions है. Okay, and the section 73 or 74 is completely based on your analytical skills. So, if you had not filed the proper reply within 30 days, in that case, the proceeding under section 73 or 74 will start. So, it is a very important thing that you should check your GSTN portal regularly. If you are in service, then also this is your responsibility. Check the GSTN portal of your business so that if there is any notice in form GST ASMT 010, you can file the reply within the stipulated time. Okay, because there is no notice is provided on your GSTR on your mail ID regarding GST ASMT 010. The same is only auto-populated in on your GSTN portal. When you will log into your GSTN portal, okay, on user services tab, you will find view and you will find view additional notices. And in that tab you will find the notice regarding GST ASMT 10 in which you are required to file the reply within GST ASMT 11. Okay, sir. And if departmental authority will satisfy with your reply, you have two options in GST ASMT 10. You can accept the demand raised by the departmental authority or pay the same through form GST DRC 03, or another option is that you can file your argument in form GSTR 11, GST ASMT 11 with the specific supported documents. If departmental authority will satisfy with your reply, in that case departmental authority will issue the assessment order, that is the order in form GST ASMT 12, that is drop the proceeding order. Or if you had not make the reply within the stipulated time, in that case departmental authority will transfer your case as per section 73 or 74. Is that okay, sir? So the all discussion which we had on GST ASMT 10, 11 and 12, that is scrutiny of return, is covered under section 61 of CGST Act. Okay, section 61 of CGST Act. So one section we had completed, that is section 61 of CGST Act. Is that okay, sir? Any doubt in section 61, then please raise the doubts in the chat box. Now, sir, we had discussed various type of assessment. Now, first assessment is your self assessment. Sir, teaching is okay, or I need to read the points from law direct also, or this practical example approach is okay? Please comment in the chat box. Whatever will be feasible for you, whatever will be understanding for you, I will use that approach. So please comment on the approach in the chat box so that I can modify myself accordingly. Next, self assessment. Self assessment is covered under section 59 of CGST Act. Sir, what do you mean by self assessment? When someone is going to file their GSTR 3B return, that is when someone is going to pay the taxes, when someone is going to analyze their output liability and taking the input tax credit on self basis, in that case we can say that the person has done the self assessment. Sir, in which form we are going to file the output tax, or in which form we are going to take the input tax credit, is your GSTR 3B return. So whenever one can file the GSTR 3B return, he is doing the self assessment. Okay. If I am a quarterly return filer. Okay, because my turnover is below 5 crore. Because my turnover is below 5 crore, in that case, when I am going to file my GSTR 3B on quarterly basis, in that case they said that the at the time of filing of GSTR 3B return, I am doing the self assessment. If I am an input service distributor, we had already discussed the concept of input service distributor, or when I am going to pay the tax under input tax distributor input service distributor, in that case I am doing the self assessment. Okay, if I am a TDS deductor, TCS deductor, that is, if I have taken any government contract, construct contract, and I am going to construct a building for any governmental authority, that is central government, state government, or when government will make the payment to me, in that case government will deduct TDS TCS under GST. So government needs to file the GSTR return. Okay, so in that case, when government is filing their return, that means government is doing self assessment. Okay, so all these situations in which one can do the self assessment, the all the schema is provided in section 39 of CGST Act. So self assessment is okay. In that case, I am going to take the next type of assessment. Self assessment is completely based on your GSTR 3B return, or the returns in which you are going to declare your outward supply and claiming your input tax credit. That is what is the concept of your self assessment tax. Now, next assessment we had discussed is your provisional assessment. That is section 60 of CGST Act. Sir, what do you mean by this provisional assessment? Okay, just take an example. From an example, I am going to clear the situation of provisional assessment. Okay, sir. On just while filing my GSTR 3B return of March 2023, okay, that is due date is for March 2023, filing date is my April 20th. Okay, because the due date for filing GSTR 3B is the 20th of next month. Okay, in that case, if I am not able to decide the taxable value or the rate of my supply, that means if I had made any special supply to a person and I am not able to decide the value or rate, in that case I have an option that I can apply to proper officer. I can apply to proper officer that, sir, I am not able to decide the rate or value of a particular supply. Can you please decide the rate or value of the particular supply? In that case, I am saying to the departmental authority that, sir, once you should decide the value on the basis of provision. That is, you should decide the value on provisional basis, and after that you may do the final assessment. So in that case, from the date of my application, the proper officer will pass the provisional assessment order within 90 days. Okay, on the date on which I have filed the application for provisional assessment, departmental authority will pass the order within 90 days from the date of application. Okay, sir. Now, just take an example. Departmental authority has decided that on the basis of provision, I need to pay the tax of 1 lakh rupees. Or at the time of final assessment, if there is a liability of 1,50,000 rupees, in that case, at the time of final assessment, I need to pay 50,000 to the government. Okay, because earlier I had paid less tax on provisional basis. So now I need to pay the tax, that is 50,000 rupees. In that case, I need to pay 50,000 along with 18% interest. Sir, interest to okay hai when I need to pay to the government and I delayed in the payment. In that case, I need to pay the interest at the rate of 80%. But sir, what is the period for claiming the for paying the interest in that case? Sir, for March 2023, I was not able to decide the value, and the due date for return is 20th April for the filing of return. In that case, from 20th April till the payment, I need to pay the interest at the rate of 18%. Is that okay, sir? Let's take another situation. If I had paid 1 lakh rupees on provisional basis, okay, on provisional basis, but At the time of final assessment, liability is only 80,000 rupees. In that case, 20,000 is refundable. So I am also eligible to get interest at the rate of 6%. Okay, sir. But the period is the date on which the order is passed by the departmental authority. उससे जो दिन होंगे उसके ऊपर I can claim the interest at the rate of 6%. जब देना है तब मुझे ड्यू डेट से देना है, लेकिन जब इंटरेस्ट लेने की बात आई, एट दैट टाइम द पीरियड शुड बी कैलकुलेटेड फ्रॉम द डेट ऑन विच द फाइनल असेसमेंट ऑर्डर शैल बी पास्ड बाय द प्रॉपर ऑफिसर. Okay, sir. So now 1 lakh rupees I had paid on provisional basis, or at the time of final assessment if the liability was 1,50,000. In that case, departmental authority has one doubt that कहीं मैंने टैक्स का पेमेंट नहीं किया, तो if I had not make the payment, in that case departmental authority says you should execute one bond with bank security, and security amount is 25% of your bond value. Okay, sir. So अगर ये सारी की सारी if I had followed all the conditions, in that case proper officer will pass the provisional assessment order, or after the provisional assessment order within 6 months proper officer has to file the final assessment order, or if assist additional commissioner or joint commissioner thinks that this time period is not sufficient or time period should be extended, in that case additional commissioner or joint commissioner can give extension of 6 months for final assessment, or if more extension is required, in that case I need to take the help of commissioner. That means commissioner has the power to extend the further period of 4 years for final assessment. That means I had applied for provisional assessment, departmental authority, that is proper authority has done the provisional assessment. Okay, within 6 months from the provisional assessment order, the final assessment order should be passed. Additional commissioner, joint commissioner can enhance that limit by 6 months, further 6 months, or commissioner has expand that limit further 4 years. Okay, now for final assessment order, departmental authority has the power, the proper officer has the power to issue the notice and require the documents, and I need to fulfill those requirements. And after the assessment order, okay, departmental authority will release my security or bond also. So that is what is the concept of the provisional assessment. And one can apply for this assessment at the time when he is not able to decide the value and rate. Okay, sir. So now, जैसा कि हम लोगों ने डिस्कस किया, we had already discussed that in case of scrutiny there is three form, ASMT 10, 11 and 12. Now for provisional assessment there are certain forms, and now I am going to discuss on that. Self assessment we had already discussed. Okay, sir. Provisional assessment provisions we had already discussed. I just need to discuss on the rules for application of provisional assessment. That means if I am not able to decide the rate and value of a particular supply, in that case I need to file form GST ASMT 01 electronically for filing the application for provisional assessment. Okay, sir. Now departmental authority will issue a notice in form ASMT 2 if departmental authority required a certain further information for deciding the provisional assessment. Okay, and I need to form a reply with the required documents in form GST ASMT 03. Okay, sir. And departmental issue authority will issue provisional assessment order in form GST ASMT 04. That means departmental authority is going to issue the assessment order, that is provisional assessment order in form GST ASMT 04. And I had already talked that I need to provide a bond with a value of security not exceeding 25%. In that case, I need to furnish that bond with security in form ASMT 05, or after the provisional assessment, departmental authority proper officer will issue a notice in form GST ASMT 06 for calling further details, further requirement for deciding the final assessment order, or on the basis of your submission, the departmental authority, the proper officer will issue the final assessment order in form GST ASMT 07 and decide the amount which is refundable or which is payable from your side. Okay, and फाइनल असेसमेंट ऑर्डर डन, आपने पेमेंट भी कर दिया, यू हैड मेक द पेमेंट, और इफ देयर इज एनी रिफंड देन यू हैड टेकन द रिफंड। इन दैट केस you had earlier given the bond and surety, so you need to take back that, so you need to file an application for release of security in form GST ASMT 08. Okay sir, and departmental authority will release your security within 7 days of 7 days of application in form GST ASMT 09. अब earlier we had discussed that the proper officer has the power, proper officer has the power. Who is the proper officer? So here the deputy commissioner and assistant commissioner is your proper officer for doing the provisional assessment. Okay sir. Scrutiny of returns section 61 we had already discussed. We had discussed that the notice will be issued in form GST ASMT 10. You need to file your reply in GST ASMT 11. Okay, and departmental authority will issue the notice, the order in form GST ASMT 12 regarding drop proceeding. Is that okay sir? Now we had discussed earlier a situation that if you have taken the registration and you are not going to file the return, in that case under section 62 of CGST Act, departmental authority will going to do your assessment on the best judgment on the basis of information available with the departmental authority as a non-return filers. Okay, if you had not filed your final return, that means you had applied for cancellation of registration and departmental authority has cancelled your registration, and post cancellation you had not filed your final return. In that case also department will decide your liability on the basis of documents available with the departmental authority, and that assessment should also called as your assessment of non-return filers. Okay sir. So in case of non-filers of returns, departmental authority will decide or your liability and issue a notice, and if you file a proper reply within 30 days, okay, proper reply, or you had furnished the returns within 30 days of filing the of the notice, in that case departmental authority will not impose any type of penalty on you. Section 73 or 74 proceeding will not start on you, but you need to pay the interest and interest and late fees. Okay, interest and late fees should continue, but no penal action should be issued against you. Okay, sir. So that is what is the concept of non-return filers. Now, what is the time limit to do the assessment of non-return filers? In that case, your due date of filing the annual return within 5 years from the specified under section 50 or 44, that is due date for filing of your annual return. इसीलिए I am again and again saying that extension of return due date of annual return is not in favor of us, because if there is an extension of due date of annual return, in that case all the due date for the proceedings are also extended. Okay, so this is a very bigger issue, this is a very important issue for us. So what is the timeline in which department will done the non-return filers? So in that case your annual रिटर्न की फाइलिंग की ड्यू डेट से 5 ईयर तक, एनुअल रिटर्न की ड्यू डेट से 5 ईयर तक का टाइमलाइन इनके पास में है. They have a timeline of 5 year from the due date of your annual return to do your assessment as a non-return filers. Is that okay sir? Now assessment of unregistered person. If you are liable to pay the tax to the government, or you are liable to take the registration under GST but you had not taken that registration, in that case departmental authority has the power. They can decide your liability on the basis of documents, on the basis of information available in the hand of the departmental authority. What is the timeline within which they can do your assessment of unregistered person? The timeline is same as per section 62, that is 5 year from the specified date under filing of your annual return. Okay sir. Or before doing the assessment or before passing the assessment order, departmental authority will give you an opportunity of being heard. Without giving the opportunity of being heard, departmental authority cannot issue any order. Okay sir. So that is what is the concept of section 62 and 63, that is assessment of non-return filers and assessment of unregistered person. Now as we had discussed, section 64, that is assess summary assessment in certain special cases where the proper officer thinks that there is a evasion of tax, or there is a loss of revenue, there is a loss of revenue, or they want to protect the interest of revenue. In that case they may done the summary assessment. Okay, in case of summary assessment they demand certain documents from you, or they may decide the liability on you on the basis of documents available with you, or pass the order. or within the passing the order within 30 days if you file the proper reply or prove that document that the order passed by your good self is not in faith of us or not correct as per the records available with us. In that case they can revise or they can withdraw the order. Okay sir, so we had discussed on the a very important case, that is our self assessment. Then after we had discussed on the provisional assessment, that is in case of I am not able to decide the value or rate. Then after we had discussed on the scrutiny of returns A70, 10, 11 and 12. Also we had discussed about the assessment of non-return filers and assessment of unregistered person. Okay, so now the topic is audit by various authorities, that is audit by tax authorities or audit that is departmental authority or audit by special audit by chartered accountant. Okay sir, so section 50 talks about audit by tax authorities. So जहां पर कमिश्नर को ऐसा लगे कमिश्नर thinks that the particular case should be taken in the audit, in that case commissioner will issue a notice in form GST ADT 01. The form is GST ADT 01. In form GST ADT 01, departmental authority will issue a notice for the business audit. Okay, but you should receive a notice not less than 15 days. That means departmental authority will issue a notice for business audit and intimate you about the audit not less than 15 days. Okay, kai baar kya hota hai, departmental authority will issue a notice for a shorter period. In that case we may argue that as per section 65 subsection 3 of CGST Act, you should give me the time period, minimum time period of 15 days before commencing the audit. Okay, or the audit should be completed within 3 months from the date of commencement of the audit. But if commissioner is satisfied that there is sufficient grounds for extension of the timeline, in that case he may extend the timeline for 6 months, further 6 months, but not exceeding the 6 months. Maximum timeline to conduct the audit is 9 months, that is 3 months, or if commissioner wants then further extend for 6 months. Okay, this is the maximum timeline from the commencement of the audit. Now sir, what do you mean by the term commencement of audit? In that case, commencement of audit means all the documents which is required by the departmental authority for conducting the audit on the date on which you had provided the document, or on the date on which they started the audit at your principal place of business, whichever is later will be the commencement of audit. That means यहाँ पर क्या हो गया, उन्होंने सारी की सारी बात अपने हाथ में रख दी. They have taken all the situation in the hand of departmental authority. Okay, because if they want to extend the timeline they can manipulate the date of commencement of the audit. This is the part of planning. Now during the course of audit, if the departmental authority will demand any document, any records, any books of accounts, in that case you need to submit all those required documents, all those books of accounts to the departmental authority. Okay sir, now Section 65 subsection 6, on the conclusion of audit the proper officer shall within 60 days from the registered person, सारी की सारी finding आपको registered person को बतानी पड़ेगी. Departmental authority has to tell all the findings of the audit within 30 days from the completion of the audit to the taxpayer. Okay, or if from that audit anything found that there is a excess claim of input tax credit or wrongly availment of refund, or there is a less payment of output tax, in that case proceeding under section 73 or 74 will be started by the departmental authority. Sir, is that okay? So we are going to revise the today's session on section 66, that is special audit. We are going to discuss on that section in our tomorrow's session. Okay sir, so today we had discussed on a very important term, that is audit and assessment. Okay, we had discussed on the difference between audit and assessment. What is the difference between audit and assessment? After that we had discussed on self assessment, that is section number 59 of CGST Act, that is completely based on your GSTR 3B return section prescribed under that is written prescribed under section 39. After that we had discussed on provisional assessment. Okay, GST A7001 say GST A7009 we had discussed. Then after we had discussed on scrutiny of returns, and also we had discussed on the term assessment of non-return filers, assessment of unregistered person. Also we had discussed on the audit, that is special that is audit by the departmental authority. Also we had discussed on the summary assessment in certain special cases where department shows that there is a loss of revenue to the departmental authority to the revenue. Is that okay, sir? So today we had discussed, or today we had started a very important point, that is audit and assessment. Okay, sir. If you have any issue, you may raise the question in the chat box, or you may raise the query in the WhatsApp group, so that we can discuss on that query also. Now we are going to sign off for today's session. We will meet on tomorrow. Bye bye. Good night. Take care.